Mortgage rates ticked up slightly after falling sharply late last year. Fortunately, experts do not expect them to keep rising throughout the course of this year. Bankrate's chief financial analyst predicts that rates will decline gradually over the coming months and eventually reach 5.75% by the end of 2024. At present day, Bankrate reports that the average interest rate for a 30-year fixed mortgage is 7.11%. Mark Hamrick joins us now. He is a senior economic analyst for Bankrate. Mark, let's start with today's mortgage rates. After falling so much at the end of the year, they ticked up quite a bit. Not too much, but explain why that was.
Well, we're continuing to try to bet, Lana, on what the Federal Reserve will be doing with its benchmark interest rate. And the reality is not everyone's fully aware of this. The mortgage rates really do track more closely to Treasury yields, and specifically the yield of the 10-year Treasury bond. All of that is a long way of saying that sometimes these rates might seem to have a mind of their own. And let's think about where we have come from, which has really done an amazing job of damaging housing affordability. You know, during the depths of the pandemic, we had mortgage rates below 3%, and we peaked at 8% in October, and we've recently come back down below 7%. So it's been quite the journey, and the impact has been to really double the monthly payment that one would make in purchasing a home.
Well, from that high of around 8% down to a low at the end of the year of less than 6%, that has to be encouraging for somebody who wants to buy a house. But what kind of assurances can you give somebody who's maybe holding on? Why does Bankrate believe that mortgage rates are going to decline steadily throughout the year?
Well, we can give them some guidance. We won't give them a guarantee in this regard, but the outlook is that we do see further decline in mortgage rates here this year and possibly below the 6% level, as you said, as cited by my colleague Greg McBride. And the reason for that is that we're making good progress against inflation, and the outlook is that the Federal Reserve itself will be bringing interest rates down as we get through this year. Now, financial markets are right now sort of baking in a prediction that the Fed could be cutting rates as early as March. That feels a little aggressive to me, but I think certainly by the midpoint of the year, that benchmark rate should go down further. And with that, I think we'll see sort of the spectrum of interest rates head lower, and with that, mortgage interest rates.
So, Mark, as everybody expects that the central bank is going to begin cutting interest rates this year, as you explained, but the cost of purchasing a home is only one portion of what people are budgeting. The effect of what we have seen in interest rates and mortgage rates has been that people have actually held on to their homes, and that has made prices go up. Do you expect in any way that the prices of properties might go down as the interest rates also go down?
We begin with the observation and essentially, a fact that the real estate market, home prices really do matter more about, let's say, local activity than the national trend, although they can be somewhat aligned. I think the outlook generally is we see a smaller increase this year nationally in home prices. So let's just say stability. And, in 2020, the sort of average or median price of a home that was sold, a so-called existing home sale, was $300,000. And in the last couple of years, that number has ticked up above $400,000, sort of settling above around the $400,000 level, of course, of late. And of course, in the West, which includes California, you're really talking about $600,000. So it really does matter where you're looking. Some of the hottest markets right now are in the Rust Belt, the so-called Rust Belt, because in some ways those housing markets have been left behind and people are gravitating to value. So I think these conditions should become better as we move through the year.
All right, Mark Hamrick, thank you. We're going to see you again because CBS News intends to check back in with you throughout the year, but especially at the end of the year to see if Bankrate's mortgage rate prediction was in fact realized. Thanks, Mark.
Thank you.